Good afternoon. If you're looking for handouts, there's some handouts in the back. If they're out, then you can pick them up at Barnes & Noble. We're selling them there. There are some handouts in the back. A little bit ago, Bobby Cordova, who's doing the presentation next door, he came over and he goes, "Everybody's in your class." I says, "It's because I'm so much better looking than you are, Bobby." Yeah, he laughed too. Good afternoon. We're going to be talking about the cash report. Of course, I know that there's been a lot of rumors and a lot of discussions in regard to the cash report. You're going to be somewhat, I think, pleasantly surprised by the cash report as we go through this, okay? First of all, let me introduce who we have. I'm Terry Dean. I'm Flaco Jimenez. I told a young lady that one time, I was messing with her, and I told her my name was Flaco Jimenez, and she looked at me and she goes, "Why do they call you Flaco?" And if she wouldn't have been selling Girl Scout cookies, she'd have lost that sale, but anyway. Sad that is a true story, but okay. I'm going to try to stay on track. Meanwhile, back at the ranch, I'm Terry Dean. I'm the Associate Superintendent for Finance in Las Cruces. With us today, we have Tami Coleman, Director of Accounting with the Albuquerque Public Schools. That's twice, isn't it? Let me also introduce some folks here that are from the Public Education Department, and please forgive me, Eileen, if I mess things up. I won't call you Eileen Suggs as I did previously, but we have Eileen Marrujo-Gallegos. Did I say that anywhere close to right? Okay. Pam Boker, but she is not here, but she's on the list. Somebody's got to stay home and do the work. Beverly Aguilar, there's Beverly. Mary Lou Martinez. And Maria Fidalgo. Now, Tammy's going to go into a little more detail. We're going to tag team on this. Some of the things I want to bring out to you, about 9 months ago, there was a work group formed to look at the cash report and making some modifications to that cash report. So let me kind of tell you who all worked with the Public Education Department on this. We had Naomi Vicente from Dulce Public Schools, myself, Tami, Chris Parrino, and he from the charters perspective, and he's with the Montessori of the Rio Grande Charter School. We had Teresa Casillas from Wagon Mound, Carol Gonzalez from Estancia, and Diana Cordova she's with the charter school, and Frank Ryan from Cobury School. So we had a lot of different schools, a lot of different sizes of school. We had Albuquerque, Las Cruces, even to the smaller schools, so and charter schools. So we had a lot of different people look at this. We even gathered the input from auditors, and thank you to Amy Carter with Moss Adams for helping us look at it, for looking at the report. Anyway, the group met 4 times in person over a 6-month period, lots of emails back and forth. But we met 4 times over the 6-month period to kind of look at it, to more tweak the report to where it met some needs that Tami will talk about in a moment, of the Public Education Department, as well as the state auditor. With that, let me turn it over to Tami.
Thank you, Terry. So before I get started, I actually would like to have Eileen introduce anybody that's in this room from the Public Education Department. There's a lot of new faces, and I think that we need to put some names to some faces. So if And Eileen, if you want to introduce your staff, they're standing up here in the back.
Oh, good. Thank you. They're all coming up forward right now. So we have Katrina Chavez, Melissa Sanchez, Cordy Chavez, Brenda Suazo Giles, Vince Vigil, and Ernestine Romero. We do have a couple of other staff that didn't attend today, so Yolanda Gonzalez and Veronica Chavez.
Thank you. You know, I had some of my staff even ask, so who is so-and-so? And, you know, some of these names are, I haven't even met a lot of these people, so I'm really glad to meet all of you and put some faces to some names, so thanks a lot. So, why did we need to even change the cash report? That's one of the biggest questions. And really, there were major problems that evolved from lack of consistency in actually completing the report. And even sometimes in the instruction that people got in order to complete the report. We've had an awful lot of new faces come into the business, and we've had a lot of new faces with PED also. So everybody kind of has their the way that they learn to do it from whoever they learn to do it, and that's basically what they're doing. And so a lot of times we come up with 5 or 6 or 7 different ways of doing a cash report, and there's many different ways of looking at it, and that's really not what we want to do. Your cash report needs to tie to your financial statements. And that's a big thing that we really need to talk about. I know that Karen has emphasized that in several of her sessions. But exactly how do we do that, and what can we do? How can we tweak that cash report just a little bit to simplify it a little, if there are any ways to simplify it? And we did find a couple of minor ways to change it, and they're really not major. Terry said, we will, yeah, I think you will be surprised that it's really not very much at all. So, there's been a lot of gaps between what the business managers are doing and what the PED staff is doing. Over the past 20 years or so, every time somebody changes, that gap gets just a little bit wider and a little bit wider. Plus, current business trends. I don't know how many of you read the article that I had put in the newsletter about the cash report. Our current business trends really create the need for us to really track things a little bit differently. Everybody uses the word cash basis. That's what's in regulation. That's what's in statute. And so if you take that very, very literally, 20 years ago, that was just fine, right? 20 years ago, we had direct deposit, but just about everything else was paid by check. The big difference now is that virtually all of your payroll expenditures are paid electronically. Plus, we have certain groups that we have to pay for our payroll expenditures that don't want their money early, right? So we can't just send that money to ERB and to NMCEA on June 30th, right? We can't send it. That creates a need for us to actually track those expenditures, but the cash hasn't gone out the door. So that creates some disparity. It's kind of a misnomer when you look at that particular aspect of it being a cash basis. If you look at the 2012 GAFR, Governmental Accounting, Governmental, there you go, Governmental Accounting, Auditing, Financial Reporting, something like that. Anyway, the 2012, and I was actually comparing this to the 2005, there is a definition in there of budgetary basis accounting, and it was not in the 2005. So that's kind of the way that I have started thinking about this cash report. It's more on a budgetary basis. We need to be reporting everything that we have budgeted in that fiscal year. So when you start out the beginning of the year, you're starting out budgeting for all of your staff, for all of their contracts. You're not going to pay a portion of their contract in that year. You're not going to budget for a portion of their contract in that year. You're budgeting for the whole thing. So we are basically needing to capture those actual expenditures also on that same basis. And it really is on a budgetary basis. I'm going to focus on payroll because there have been some very significant differences in how people are handling payroll. And it's mainly at the end of the year, on June 30th. How are we handling that payroll that is left at the end of the fiscal year? If we don't pay our teachers out on June 30th, if we are not handing them a check, how exactly are we paying those out? But no matter if we hand them that check and pay that payroll out right at that moment or not, we're always going to have a couple of things left that we have to account for. And that's the ERB and the NMPED that I was talking about. There's probably others out there, depending on your district and what your policies are, what benefits you offer. But the main thing is that all of the expenditures, 100% of those expenditures for your payroll need to be counted as expenditures on that June 30th report. Even though you're not going to send that money out until July and sometimes August. It all has to be captured in June 30th. That's one of the areas of consistency that we really need to address and need to make sure that everybody is capturing it properly. I have talked to a couple of business managers, and the comment that basically I have received is, we can't afford to budget all of it in that year. We can't afford to pay it all out in that year. You know what? You gotta be able to pay for it in the year that you're in. And this is kind of an odd way to put it, but let me just say this. You have to operate as if you're going to close on June 30th. We operate on a fiscal year. We must get everything paid by June 30th. Now, how many districts have we actually had close? I don't know that we've ever closed a district in this state. But we have had some charter schools close. And I have to tell you, it's been pretty tough at times. So we have got to make sure that everybody is on the same page. Everybody has got to expend their payroll and pay for all of their bills by June 30th and capture it on this cash report. Okay? So a couple of the things that we went into this review of the cash report, some of the things that we wanted that were goals, we wanted to clarify the instructions to actually gain consistency in report completion by the district or charter. Okay, that's one thing. Another thing is we wanted to gain consistency in instruction for report completion from PED and other authorizers. Albuquerque Public Schools is an authorizer. So we want to be consistent in the instructions that we as authorizers are giving you also. And then the third thing really is consistency in review and use of this report by the auditors. There are as many ways of looking at this as there are auditors out there. So that's another part of the goal. Some of that is not necessarily in our control. We're going to really lean on Amy heavily to help us in that respect, Amy from Los Adams. But it's going to require some work from the state auditor so that your auditors are not giving you different information than what we're giving you. Okay? Your auditors are also reviewing this report all in the same way, rather than them reviewing it based on whatever preconceived notion they may have for this particular report. This report is not important to them, but it is really important to us, and it's really important to PED, and it has got to match your financial statements. So you get to the talk about the financial statement. Well, we have all these different auditors
that are preparing our financial statements. And there again, there are as many variations of those financial statements as there are auditors out there. So we really want to work on some consistency along those lines also. So if I go back to 20 years ago again, and we talk about our financial statements and our cash report, it used to be that you could point to a number in your cash report and you could point to a number in your balance sheet and they matched because we were truly on a cash basis. And it's just not that way anymore because of our ERB, because of our NMCA, because of the fact that we may not hand out those checks on June 30th. But we just all need to be capturing these the same way. So to clarify the reporting of our summer payroll transactions, all of our contracts should be based on a fiscal year of July 1st through June 30th, right? That's our fiscal year. That's the time frame that we're talking about. The payroll wages, however, are earned in a shorter time frame, right? And I'm talking predominantly about our 9-month employees. Those wages are earned over a 9 or 10-month period. Usually they're between the period of, say, August 1st to June 15th. It depends on your first day of school, the first day that you actually hire back your teachers. Depends on how many days they work. So it depends on your individual school's calendar. And then the third thing you have to consider is, what is your payroll year? When do you actually pay those people? Do you start paying them before they start working? We would hope not. Okay, we cannot pay in advance. So we need to make sure that our first paycheck for those 9-month people is after they have put in that amount of time. If you're paying them for 7 days, they really should have worked those 7 days already. Okay, so kind of a good schedule that I've seen some districts and some charter schools use is, say they're on a semi-monthly basis, they pay payroll on a semi-monthly basis. They start paying on August the 30th. And that's usually a pretty good time. They usually start beginning to mid-August and they've put in the time. So if you figure that you're gonna pay them over the 12-month period, that's 24 paychecks. So the very last check that they get for this contract year is really August 15th, right? They got started paying August 30th this year. These paychecks are going to take them through August 15th of next year. Well, your July 15th and your July 30th and your August 15th checks are all basically for that following fiscal year as far as your payroll calendar goes. But those days are already earned, right? They're already captured. They're already in as expenditures. So this consistency, this reporting of your payroll is very, very important. I think most districts, most charters are doing just fine, but there are some that are not, and that's why I'm going so heavily into this. Another thing that we wanted to accomplish when we embarked on this discussion about changing the cash report was, which of those cash balances do you actually carry forward? You carry forward one of those balances to the next year. Okay, well, what you've seen is there's basically a section of, I think, 4 lines that you basically carry forward to the next year. And what we have seen is districts and charters will use them as it best benefits them. And so we need to make sure of exactly what cash balance we're bringing forward. So I think one thing that you'll see in these changes that I'll have Terry put up here in just a minute is that we basically have eliminated the choices, okay? I mean, I don't know that there ever really were choices, but some people felt like they had choices. And so we're basically eliminating those choices, okay? So your cash balance that you end with is what you start with, and there's no real variations, okay? So Okay, so the results of the work group are minor changes. We have clarification of line descriptions and instructions, and the minor changes are in the lines now. Let me see. Well, Terry needs to come back so he can bring stuff up for me. And at any rate, remember, if you look, there's Terry.
My allergies are killing me. There's no Kleenex left in the women's restroom. Can't take that.
Does anybody need him to save us a seat? Since you were there? Yeah, okay. Okay, so basically this is the cash report as we all know it. Line number 2 was the outstanding loans that we ended with the year before. Well, we're subtracting out those same outstanding loans on line 10, right? Okay, so you have a bit of redundancy there. The changes that we have made remove that redundancy, okay? We're not adding them back in anymore. We're not subtracting them and then adding them back in anymore. Same thing with chargebacks. The chargebacks, and that's why I just lined through these so that you could see line 2 is no longer there, line 3 is no longer there, and that eliminates the need for line 4. Line 10 and line 11 are gone, okay, because we no longer need to add those back in. So at the bottom, we still have a need to show our outstanding loans. We need to know what that information is. We need to know how much in accounts receivable or RFRs we still need to get, or that's outstanding. We also need to know what our payables are, okay? So we basically have flip-flopped these 2 lines. We've put the total outstanding loans at the bottom, and we've put your payroll payables right above that. And that's actually described in the handout. If you look at the handout that you got, that's exactly what you're seeing there. And so the main reason for flip-flopping this is because at the bottom of the report, after your payables, after your payroll payables, you have a really good chance of tying that directly to your balance sheet and your financial statements. Okay? So you may not see the benefit of this now, but I think the first time you do it for year end, you will see the benefit of it. Okay? And then your outstanding loans are basically at the bottom. Your outstanding loans should always zero out. Okay? At the end of at the grand total column, the column all the way out to the right, your total outstanding loans will zero out. Okay? So those basically are kind of it just bottom line. So the cash balance that we will carry forward, and this it states this in the instructions, line 7 now carries forward to line 1 in the next year. So line 7 from your June 30th report carries forward to line 1 on July 1st. Okay, so there's no longer 4 different lines that you carry forward. That's basically it, okay? And, you know, that should tie to your general ledger. There should be really no reason for that not to tie to your general ledger. Okay, that's probably, okay, just one more thing. On the chargebacks, if you're tracking chargebacks, really as you should, does everybody know what chargebacks are? Basically, if you get written a check and it bounces, it's a hot check, okay? You basically keep track of those You don't necessarily reverse them out of revenue right away. You're just going to put them in this chargeback account and you're just going to hold them there. But they have to be recorded here because they do affect your cash. You didn't get your cash. So if you have chargebacks, if you're tracking them that way, basically that kind of thing just needs to be put under the adjustments. If you have, in the middle of the year, at the end of any given quarter, if you have other things that affect this, we want it put in the adjustments, and we want all of the adjustments explained, okay? So let's say, and Terry had a really great example from earlier today. Let's say you have an accounts payable run and you've posted it, and now it's time to run your quarter end reports, and those payables are sitting in there. That would create an adjustment, you know? So you can control that to a certain degree by just not posting those things until the next day or whatever. But the adjustment column or the adjustment line becomes very, very important now, okay? So everything in the adjustment column is going to have to be, you know, very well explained. And that's probably a big field that PED is going to be asking about. So what I'd like to do now, Terry has applied his numbers, used his numbers in this new style of cash report. And so I'd like for him to go through, he and his staff to go through what they have done. Chris Parrino also has used this cash report and applied his numbers to it. And he had some really good feedback. He actually felt like it was just, you know, just a little bit simpler, a little less discretionary, I guess, but just a little bit easier to complete. So that was really good feedback. Anyway, let me have Terry and Las Cruces go ahead and go through their numbers, and you can kind of go through it with them. Okay?
First of all, let me state that I haven't done a cash report on my own in years, but Melissa does all of those for us, and she does a great job. So I'm perfectly happy to let her continue in that role. Okay, a couple points that I want to bring up. The cash report is a report that we're required to send to PED, right? Okay, it's part of what we do. It is, and so the changes that we made, I really don't consider them dramatic or drastic changes, but it does assist PED, and I can't remember if Tami mentioned this. The Public Education Department has had a finding for the past 2 years, and this finding, this audit finding, is because of the inconsistency of the application or the reporting of cash. That's one of the reasons. Now, somehow the state auditor got involved in this and kind of muddied the waters. Accountants are good at that. But they've got involved in this. But number one, this is a tool for you, okay? Just like your financial statements. Your financial statements don't belong to the auditor. They belong to you, okay? You should know what the numbers that are on the financial statement, and when you see a number that doesn't look right, it doesn't make sense in your head, it's probably not right. And you know your auditors, and the auditors are next door, they screw up sometimes, okay? You need to know what you're looking at, and you know your numbers better than anyone. The financial statements belong to you. The report that goes to the Public Education Department, I'm going to say this as sensitive as I can, and most everybody knows when I say that I'm being facetious. Doesn't belong to your stinking auditor. You do the report, okay? And invite your auditor to leave your office, okay? I've done that a few times, and it's fun. Okay, so let's just kind of walk through this report. Now we have the instructions. So what I want you to do is you can read the instructions probably much better than I can even. And so we're just going to kind of walk through the report. Line 1 on the report. And the cash report, when you end one year, then that should be your beginning number when you start the next year, right? Okay, we're pretty logical folks. So if we end the year here, then that's going to be the same number that carries forward to the next year. So line 1 is the cash that was reported the last year. You'll see in your instructions that that is going to be the total cash before you subtract out the payables for your payroll. Tami mentioned earlier, if you are paying payroll after the fiscal year, but it's for the contract for the previous fiscal year, then all of those expenditures need to be booked in the year in which the expenditures occurred.
It was
what
earned.
What principle is that? What accounting principle is that?
The matching.
Matching principle. There you go. Harry, I've got an ASBO buck for you.
Who is that? Who is that? Who is
Harry, in the back. That's the matching
Here we go.
principle.
Here we go.
That means the benefit for that expenditure is posted to the period that received the benefit. Okay, that's called the matching principle. And I know you guys know all of that. But anyway, so we take our total cash, then we subtract, the very next line on that is, no, it's not the very next line. Okay, so that is that is prior to the expenditures being, or the checks being written for your summer payroll. Okay, that's your total cash. Then the next lines are simple, right? Total revenues for the year. That's going to be the revenue that you have received and you have posted to your books. That number needs to tie to your general ledger. Okay? Then prior year warrants and voids, warrants, that's an old term, but if you void a check from a prior year, say for example, a vendor brings you back a check or you receive a check back after the end of the fiscal year, that's where that goes. I actually personally, we handle those a little bit differently, but if in case that's how you handle them, then that's where that number goes. In line 5, current year expenditures, piece of cake, right? We are right now, what we're doing is we're taking our total cash, our total receipts, our total expenditures, right? Straightforward, piece of cake. Then we have our total cash, okay? In line 7. Now this is where it's kind of, we wrestled and in eastern New Mexico where I grew up, it's wrestled. We wrestled with what to put in there as far as a description, and we had many revisions of the instructions on this. But it's those expenses that are attributable to the previous fiscal year for payroll. ERB, your state taxes that before they're actually paid out. Those are going to be most accounting systems, and I have not seen an accounting system that doesn't handle it this way. But the accounting systems, before you write the check, that's going to be reflected in a permanent account on the balance sheet. It's going to be in a liability account on your balance sheet. So, to use another technical accounting term, it ain't going to balance if you don't use those numbers. Okay? So you have to pick those liabilities up and reflect those. Now, here's one that, as Melissa was putting the numbers in, she had a very, who left water there? She had a very good question, and she goes, what about the other payables? Okay, it's kind of like the other white meat. We really don't talk about it, okay? But most of the accounting systems that I've worked with over the years, if you have a cutoff period at the end of the month, okay? This year, it happens to be that March 31st is on a Monday, okay? Now, let's take in, for my illustration, let's say that March 31st happens to be a Wednesday, okay? In my district, what we do, our processing period for accounts payable, our cutoff, we process all of our batches on Wednesday. We print checks on Thursday. okay? We've changed from the end of March to the 1st of April during that meantime. Now what that means is, and then the accounting system, once we print those checks, it goes in and it debits the accounts payable and then it credits the cash, right? Okay, basic accounting. Well, when we run that report, when we run all of our reports as of March 31st, those amounts are going to hang out in payables on your balance sheet. They go in this column, okay? They go in this adjustments. Now, if you don't want to mess with that, then pay attention to the calendar and process the checks on the 31st. And then you don't have to worry about it, okay? So it's a timing difference. It's just a timing issue. You can get away from that timing issue, but you just need to process a little bit differently at the end of the quarter. A previous accounting system we used, we did not process accounts payable if they was going to fall within that crack. We could batch everything, but we didn't post it. We didn't process the batch until it wound up going to the next quarter. Okay. So the adjustments is where you put, there's other items that can go in there, but that was an example that is pretty common at the end of a quarter. Other items, let me see, do we have any examples? Now, if you put anything in that line 9 on that adjustment, then there, at the very end of the report, there's a place to detail what that is. Okay? Piece of cake. Line 10, total reconciled cash balance. Basically, we've taken our beginning cash balance, we've added our revenue, we've subtracted our expenditures that we've posted to the books, we've subtracted any outstanding payroll liabilities that is going to be paid in a subsequent period. I'm sorry, added them back in, thank you. And then we've done the same thing with any other adjustments. If you say, for example, like the accounts payable, we've added those back in if they've been booked to expenditure, but the check hasn't been written yet, okay? Did I say it that the right way? Yes. Okay. Then outstanding loans. If you have, Carrie's right over here. Anybody from Hobbs? And they admitted it. I can say that because I grew up close to Hobbs. But so outstanding loans. This is where you book your outstanding loans. Now I am just curious. And this is just a straw poll. Who actually books their loans to, let's say, Title I in their general ledger? Raise your hand. More than I thought. Okay. I do not. I don't actually book them to my general ledger. Yes, sir. JAL. But anyway, this is where those outstanding loans, those interfund loans that go back and forth between Title I, between your operational fund, Idea B, insert fund here. This is where you book those outstanding loans. And then the tail end of that is the ending cash. Okay, it's really pretty straightforward. Chris, did you want to say anything about when you dropped your numbers in?
I just felt it was pretty simple. You know, I mean, there's just less steps to do. So in the end, I mean, it's less work.
Well, if you didn't hear Chris said he thought it was really simple. He said it was less steps, and it gets the information to PED that they need to see. It gets the information that it creates the uniformity that the auditor that has been writing PED up for this. It creates that uniformity and it complies with the state audit rule. Now, one of the things, and I'm gonna be real frank. The PED people are right here, and I've asked them this question 14 times. Okay? Who is going to train the PED staff to know what they're looking at? Okay? And that's a reasonable question, and Eileen recognizes that that's a reasonable question. Because just because Steve sends his report to one budget analyst, I send mine to another, Chris sends his to another, so we've got 3 different methods to do it because that's how the budget analyst wants to see it. Well, Eileen and the crew are going to be working together to gain consistency within their own staff. Okay? So, now I'm going to challenge you guys now. If you get inconsistent information from PED that's different than the instructions, then we need to get together and figure it out. But right now, everybody's agreed to these instructions. So the budget analysts need to be following these instructions as well. Okay? If we're all going to play on the same playing field, you know, I told Eileen, I said, you know, we're all a bunch of accountants. We follow the rules. We do not run with scissors. That if, and we want processes to follow. That's just part of our nature. But you know, everybody needs to follow those same rules. Okay. And I didn't mean to come across negative when I said that, but I just wanted to tell you about some of the real discussions that that we've had through these work groups, and even questions that were asked as of even this morning. Okay, at the tail end of the report, so let's scroll down, and you can't scroll down, I'll scroll down. Now, we didn't drop the information in here. It wasn't there. Melissa's going, what'd you do to my report? I just pulled it up. Okay, they must have not carried forward, Melissa. What's that? Well, you see where it all has all the references? We've got an error in the. Melissa, are they linked? Okay, this page blew up. It shows to be, oh, it's linking to our network drive. That's not good. Okay, that's far away. Okay, the last part of this is a reconciliation to the bank statement. Now, one of the things, you ready for this? We need to provide one additional piece of information to PED with our reports. You need to scan your bank statements. I'm not making the rules, I'm just telling you. We need to, what's that? Just page 1, I'm sorry, not the whole thing. Just the page 1, and let me tell you why. If you're not reconciling to the balance that's on the bank account, then what are you reconciling to? Part of this is a check figure that PED needs to put in place to make sure that we are reconciling to the bank account numbers. Now, at one time, as we were talking about this, no, I'm not even going to go there, but all we need is page 1 of your bank statements. Now, if you have multiple bank statements, if you have multiple bank accounts, of course, that's going to be multiple statements. If you run one bank account, then it's a piece of cake, right? Just scan the one. Send it to them in a PDF with the report.
They can black out the account numbers.
And you can black out the account numbers. That's a good thought. Yes, sir.
Terry, I've got a question. So it looks like we're using line 12 of the new cash report. Since we're getting right in the middle of budget season for next year, are we getting cash balance that would be budgeted to line 12 or the audited cash balance on the financial statement?
It would be line 7.
Line 7. Yes. Line 7. That would be, what's that? Before you add back the liabilities. That's to add back, that's for the budget, Steve. That's the line to budget. I see where you're going. because you're going to be writing out all those checks, and that's going to decrease your cash. But in the subsequent year, but that's the cash that you rebudget. Now, yes, Harry.
I guess we'll see how this goes, but it seems to me if the idea of sending in page one of our bank statements is to make sure that we're reporting this correctly. There's a huge gap in the outstanding items column in the reconciliation area. But I can fudge that till the cows come home and my budget analyst is never going to do it. The auditors will. But how does this help the budget analyst evaluate what I'm doing myself?
You know, and to answer that question honestly, probably none of us will know until it comes out on the front page of the Silver City newspaper. And then we're going to be talking about the dirty dog for the next 10 years. You know, it gives us something to talk about. But the question's a good question. In case you didn't hear, is then what's stopping him from fudging his outstanding items? Integrity, I guess. I don't have, no, but really to answer your question is they're wanting to see if the very last page of that is a reconciliation to the bank balance, and
Terry, would it be your actuals?
excuse me, the actual.
When you upload your actuals?
Well, but no, what Harry's talking about is when you're doing the actual bank reconciliation and you have outstanding items to the bank account. Your actuals are loaded, okay? So your actuals are loaded and they should match the number as far as the revenue and the expenditure that you have here, correct? On the report. Now, but what Harry's talking about are the outstanding items within your bank statement. I mean, when you're doing that bank reconciliation. Check number 3748 didn't clear. Yeah, you know, that is a problem. That is a problem, but that is not a problem that we're going to, that the cash report can address. Yes, we can send the public education department 37,000 pages of data. At one time, they were talking about sending electronically all of our general ledgers until Tami and I said, "You knoweth not what you ask." Okay?
So I guess my point obviously isn't that I should send more, it's that why do you require this extra page? Since it provides zero assurance.
I think it does provide some information to follow up with the next quarter's actuals if you wanted to investigate.
It does provide, in what the way I see it, Harry, because on the very last page of the bank reconciliation, you do start with the bank balance. Okay, they're wanting to confirm that you are starting with the bank balance. There have been some findings throughout the state that when the bank reconciliation was done, it didn't tie to the bank balance or the general ledger. Then what are you reconciling? It's just to, it's not a perfect system. This is how I describe a moo-moo, okay? One size fits all, but it's flattering to no one, okay? And that's kind of the situation in some respects of the blanket type reports, because all of our financial statements are different because our districts, our charters are different, okay? It's kind of the same general format, but they are different. This is kind of a moo-moo because we've got to have some type of consistency. And this was about the best way that we could come up with to provide some type of, to strengthen the accountability somewhat, but with still out not uploading all of our general ledger.
Thank you for that.
It's about the best I can come up with, Harry. Yes, sir, ma'am.
On the payroll liabilities, if you have transferred all the money that is connected with the end of the year to a payroll account, you've expended all your, as far as like operational, it's all sitting in a payroll account, which doesn't come up with those. Will you have anything in that payroll liability?
It should come up.
It should.
have
You want to
your
take the mic?
payroll- You should have your payroll clearing account listed there also.
Well,
It's one of your bank accounts.
right?
It's gonna be down at the bottom, but up at the top, it's never been listed.
Right, but it's going to be down at the bottom now.
And it is gonna be down at the bottom,
Mhm.
but like in operational, that line item, payroll liability.
Right.
Is there going to be a figure there if you transferred all of your payroll information for the end of the year? Your ERP, your ERISA, the payroll account is gonna hold on to that until it is due. So, are we gonna have anything in the liability account if operational has already cut those checks and put them into the liability, into the payroll account?
You really will, because that very last page where you're listing all of your bank accounts, if you've got the cash balance, the bank account balance for your payroll clearing listed there also, let's say you had $100,000 worth of liabilities that you transferred from your operating account, I guess, to your payroll clearing account, right? Your payroll clearing account is going to show that $100,000 balance here.
So is the payroll liability, or is the payroll account that's listed on the bottom supposed to equal all of the payroll liabilities that are listed up?
Not necessarily. Not necessarily, because you're going to have some outstanding items. This piece really isn't different from what we have been doing or should have been doing. It really isn't different. You've been required to list all your bank accounts there prior to this.
And we have. It's
Right.
just we transferred all of our expenses for payroll by the end of the month. And so,
Right.
in order for my operation account to reconcile, if I re-put, because that payroll expenses, that payroll liability is included in my expenses already. So,
Right.
do I break it out? Because then it wouldn't equal my expenses. I have just totally lost it. I'm so sorry.
No, okay, so I'll turn it over to Terry in just a minute, but let's talk about your payroll liabilities for just a minute. Okay, so all of those payroll expenditures are in your expenditure cell, right? They're subtracted out of your resources on your expenditure line, okay? So what we're doing on the payroll liability side is basically adding them back in because you still have that cash in your hands. It's in one of your bank accounts. It's in your hands. It's in one of your bank accounts. Okay? Right?
I did scroll back up to that part too.
Okay?
I mean, when you take a look at this, if you look at, I can't really see it well enough to read it.
You're getting old, Chris. Don't let the hair fool you. Where's my home button?
I mean, if you look at the expenditures, you gotta recognize your payroll expenditure. That's gotta come out of there already. So that's how you gotta get to cash right there. But the reality of it is, for many of you, you haven't actually paid that out. So you gotta put back those payroll liabilities. And so when you, I've had too many different computers I've touched today. Where's the scroll down here? So that's how you get back to the reconciled cash, because you got to put back that payroll liability. So I think when you guys actually go and do this, you're going to see how easy. Really, once you do it yourself, you're not going to find it any more challenging than the old cash report was. It's just going to be a lot easier. But that's why you got to. I don't know if I'm explaining any better.
I see what you're saying. I see what you're saying. I see your point. Let me make sure that I understand your point, okay? And if you're wondering why 2 microphones, as soon as we get this, we're going to be posting this on YouTube. No, I'm serious. It's right. It's going to be under Accountants Gone Wild. Okay, now that part was a fabrication. We are going to be posting this on YouTube, so and hopefully it'll be up by the end of the week. So you'll be able, if you want to go back and rewatch this entertainment, then it's there for you to see. So the question is, if I'm understanding you, if you've already moved the money out of your operating account to your payroll account, to your clearing account, then you're going to be accounting for that money twice. That's the bottom line, right?
Well, and it's, I see where I'm at to get back in, but I now understand it's the accounting. It's like when the auditors come in and say, you guys haven't, those checks are still sitting somewhere.
Correct.
And so now we're gonna add those back into your account because they aren't out of your bank account. But now we have to go through the ERB and the, I mean, all of these accounts and
Right.
figure out this portion is operational, this portion is federal, this portion is that right?
Okay, did everyone hear her? Okay, you're good and loud. Okay, and that's a very good question, and that's a very fair question. And but you're talking the difference between financial statement preparation and reporting the cash to PED. I think that is the distinction. The cash report to PED. Now, I may get kicked under the table, okay? But once, this is my opinion, it has not been confirmed by anyone that's sitting at the front table that has veto authority. Once that cash is moved to the clearing account, it's then going to be reported in the clearing account. Es todo. Now, where you come up with the difference, and Steve's shaking his head no at me, but I think where you come up with the difference, that's for reporting to PED. And Maria's nodding. So, but where you come up with the difference is when your auditors say, of those checks that you have really not spent the money. They're sitting in your vault somewhere. The cash is sitting in your clearing account bank. Those have to be reclassified back to the account when you give the information to your auditor for the financial statement preparation. I think we're talking two different issues. Yes, you're correct on both points. Okay? From the financial statement purpose, if you have moved your cash to the clearing account, does that make sense? Amy, what are your thoughts? You're sitting back there not saying anything. For financial statement purposes, you need to be able to break that back out and give it to the auditor and say, here's the amount that's attributable to Title I, here's the amount for Idea B, here's the amount for operational, that then is reclassified for financial statement purposes back to the appropriate funds. That's once a year versus one time a year. Now, in Las Cruces, we and Crystal and Melissa do this, so we don't book it in our GL until we actually send it out, right?
We book it and then we liquidate the expenditure when we send out the cash.
Okay. We leave it in the fund. We leave that in the fund until it's time to pay. And then we move it, then we transfer it to our clearing account before we send it off. That's just what we do. So that makes, this would work for us. But in your case, where you're moving all of those ERB and all of those state taxes and all of that other information to your clearing account, what you're saying is if you do it that way, you're going to report it in both places. Is that what I'm hearing you say? If you
Yeah, I'm going to show it it's going to be included in my expenditures, and then I've got to come back on that payroll liability line and figure out on my ERB, operational is this much, federal is this much, if we have any activity is this much, and each one of those then has to take a portion of that ERB and put it on that payroll liabilities line.
And we do that, and your complaint on that, or this point that you're making, is you've already funded your clearing account. Is that right? Okay. So Maria, did you follow that? Yes, sir.
Sorry. I understand what we're saying here, but in our system, we use vision. The liability stays in the fund until we pay the bill.
You do the same thing we do.
Right. Well, I fund the account. The cash is in the clearing account because the fund funded at the time payroll happens, but then when you send the money out, it leaves the clearing account and erases the liability of the fund at that point. But you always have the payroll liability identified by fund. You don't have to go back and do kind of backtracking like you're talking about for the audit.
Right.
And then when you do your audit, your liabilities are already on the ledger. Doesn't matter what the cash is at, as long as you account for the total cash that your bank account is in. If you've done the transfer, you've moved cash from account A to account B on the ledger, your liability should be zero if you're a business. That's the way it works in business.
Okay, I see what you're saying. Yeah,
Liability still stays
we're doing the same thing.
Right. Then when you actually wire the money out, you post that transaction and remove the liability. The cash leaves the clearing. It doesn't go back to the cash.
And we do it, we write like all of our paychecks and we write all of our payable checks after every single payroll. Which means if there's a liability account with all of them, it throws them into the payroll account.
But you're not, you're paying ERB by check still?
Yes.
Oh,
Okay.
We got a specific check for ERB.
That.
We don't.
And that's the difference. And what we just learned, I'm sorry, what we just learned is she physically still writes the checks for ERB. She still physically sends the checks. So that would be the difference in that between wiring. Leslie?
To me, the confusion is three quarters out of the year, the payroll liabilities are outstanding items, just like any outstanding check that didn't clear.
Right.
And so are you saying we need to, regardless, we still need to put those payroll liabilities in? Why does payroll not the rest of the year?
Do you want to talk about this? Want me to?
End of the year auditing because that's a budget, but this is like cash, not a budget.
Okay, let me tell you where this issue came from. Okay, let me tell you where this issue originated, and maybe this will make more sense. There were some folks that were not, their teachers started to work. They paid them over a 12-month period for the school year. Okay, they started to work in August, let's say, and so they started paying them in September. So their summer payroll, they just went ahead and booked their payroll when they actually wrote the check, instead of making the contract attributable to the school year in which the services were rendered. Okay. Now what that does is that moves part of those expenditures to the wrong year. This is an attempt to try to fix that. That's where this is coming from. Okay? If it's already cleared out, you may not have anything in there. However, if you have your vision set up similar to what Steve's system is in Gadsden and ours in Las Cruces, is our liabilities are in the fund until we actually send the money. Okay. Well, and the auditors are going to make you reclassify those. But on this report, I would just take those as an outstanding item. Okay. Now, if you do it the way that we do it, and then we transfer via ACH when the payment's due, then those liabilities hold up in the balance sheet until we actually post the wire transfer. And then at that point, the liability is liquidated. We're going to have to play with it. We're going to have to play with it. It really is a simplified form in a lot of respects. Now, there's going to be questions. You're going to need to work with your budget analyst, okay? And Eileen's going to be working and doing some training with her crew too. So it's not necessarily a dramatic change. It is a slight change, but yes, ma'am. Good question. When do we start doing this? Did anyone pick up those little soft rubber balls that they had out there? If you have those, throw those. Third quarter. March 31st report. Okay, and I will tell you why. I will tell you why. The purpose of doing it in the third quarter is to where where Public Education Department can show their auditors that they have addressed the issue and to get the audit finding taken care of. Okay? The state auditor, another bald guy that's not as good looking as I am, but the state auditor wants this fixed. And so we need to implement this as quickly as possible. Yes, ma'am.
Okay, I have a really stupid question.
There's not a stupid question, only my dumb answers.
I'm feeling pretty stupid. We're starting this March 31st. Now, come June 30th or whatever, or whenever we start using line 7, this March 31st, where did we get that position?
For line 1,
Line 12, it was, I would say before this.
Yeah.
Line 12, basically, because it's before both of these.
I would agree.
Okay, if you're looking at your old cash report, it would be from line 12. Would be line 12. That's the total cash before outstanding loans and before payables, just like this is, just like the new one. Okay, line 12. Okay, a couple of other points. So when you go to budget your cash balance for next year, you're going to budget from the line 7 that you end this year with. That's going to become your line 1 number. And typically, that's the number you're going to budget, okay? There are some very small organizations, some very small districts, and some very small charters that don't want to budget all of that because they need to keep some cash on hand in order to cash flow them until they get their RFRs processed, okay? So they may not budget 100%. But you need to work with your budget analyst. They will work with you on the 910B7 form, okay? If this is a very valid concern of yours, okay? But I think most people are going to budget that line 1. Yes, Karen. Okay, Karen has a suggestion. She has 2 cents worth. What's 1? No. Go ahead.
One of the things about what you said, you keep saying get with the budget analyst. Really, get with the budget analyst and explain your budget analyst so they know what to expect and what to look for on the cash report. If that routine or that process you use is going to define what you actually
Okay, so Karen is saying to really work very, very closely with your budget analyst, you know, starting the first time you do this so that everybody's on the same page. They need to learn from you and you need to learn from them, right? So we all need to be on the same page. If we feel like we're not being consistent, you know, let's get some other people involved in the conversation. Now, you know, another thing that will be required, some of the handouts I think have it, you're going to be required to sign your cash report, okay? And that signature is basically to certify that the information contained in the cash report reconciles to the district's general ledger. Okay, so that is another thing, is you will be required to sign this cash report, okay?